In the studio with me from Oasis is investment analyst Fahad Shaikh and also is Ismael Ebrahim, and we're going to talk about two companies that form part of their funds and their policy for the next couple of years, I would imagine. One is RCL Foods, the other one is Pallinghurst. Fahad, Ismael, thank you very much for coming in. Let's talk about RCL Foods first of all, and if we can start with that. This has been a sector that has been so badly beaten up. It was normally known, I think, in common parlance as rainbow chickens. What's happened?
I think before we get into the stocks, I think it's important to look at the context, where we're recommending those as a top picks, RCL Foods and Pallinghurst. If you look at the South African economy, we're currently looking at electricity constraints. We're looking at possible fiscal tightening later in this year. And then if you look 2 years forward, we're looking at possible increase in interest rates. So our view is that over the next 3 to 5 years, economic growth in South Africa is going to be relatively moderate. If you look at the equity markets then, what you'll find is that given this backdrop, a lot of investors are either fully invested offshore, or if you look at companies which have a high offshore earnings exposure, or if you look at companies which have had a stable growth profile, those companies have already been discovered by the market, and you can see that in terms of valuations. Valuations on such stocks are currently very pricey.
A perfect example of that would actually be, the likes of Naspers, which we know well.
Yes.
Our founder bought it at about R1.45 a number of years ago, and the stock is now trading at 1,700 Rand.
Yes.
So that's a perfect example of something with offshore exposure that is really fully valued.
Is there any chance that either of these companies you're speaking about now could be the sort of Naspers of the future in a diluted form, do you think?
I think if we look at the attributes that we look for within companies, and those are strong market positions, strong balance sheets, strong management teams, profitability and cash flows. And if we go into these companies a bit later, you'll see that they do have the attributes they have those exact attributes. And with that, we then believe that going forward, they are likely to outperform, and they could eventually be something like the Naspers, hopefully.
Fahad, what I like about RCL Foods is the management and the backing, the people behind it. I mean, that really does fill me with confidence.
Sure. So if you look at RCL Foods, you rightly point out a very astute management team, and then a majority shareholder in the form of Remgrow.
Yes.
Obviously, that does provide a lot more oversight and does provide support to the management team and the strategy. But as you indicated, RCL Foods historically was just rainbow chicken.
Yes.
But over the last few years, this group has transformed. So from just having a poultry exposure, now they have access to a spectrum of products. So through the Food Corp acquisition, you got some very strong grocery brands. And then through TSB, you got exposure to the sugar side of the market. So I think the group has truly diversified over the last few years, giving them access to market-leading brands. And if you were even to look at just the poultry side of the business, you indicated that that's a segment of the market which has faced significant pressure over the last 5 years.
Because of the import problem, of course, and
Yes.
also because, I know that the South African consumer is under pressure, but it's not just about that. It's all to do with the fact that there are so many cheap imports from countries like Brazil.
Sure, imports been one side of it, which limited pricing power, and secondly, feed costs. So over the last 6 years, you've seen maize prices, soybean prices moving up substantially, whereas on the pricing side, the chicken producers were not getting enough pricing. But if you look at the last 6 to 8 months, we've seen that reverse dramatically. We've seen maize prices down almost 40% from its peak, and we've seen chicken pricing also improving. And that's not just on the back of imports reducing. That's also on the back of, if you look at those tough environment over the last 6-7 years, that forced a lot of smaller players out of the market.
Yeah.
So at this point in time, the high quality producers, it is giving them a lot more pricing power than what they had historically. And we believe that will be a key catalyst for earnings on the poultry side of the business within RCL Foods.
Ismael, just before we get on to Pallinghurst, do you think this is a defensive stock, RCL Foods?
I think it's got, like I indicated earlier, with those attributes, at the end of the day, people still need to eat. And as the formalization goes through and they drive this, another attribute we'll talk about perhaps a bit later is the African opportunity. And as this formalization goes through, you get rising wealth. It definitely should be a defensive stock. It certainly, hasn't outperformed, but going forward, we believe the attributes that it has, the way the business is transformed, it's definitely well positioned to take advantage of that.
Something that's not defensive is Pallinghurst Resources. Now, this is such an interesting story because of the names behind it, and I'll stay with you, Ismael, on this one. Brian Gilbertson. I mean, he's got a name. He's got an ego, and this hasn't been exactly the most successful venture of his life. But I just get the feeling now that it's starting to come to the fore.
I think it's all about timing, and you're indicating that now it could be the time where the tide is turning, tide is changing. And you know, Brian Gilbertson, together with let's talk about the company that he keeps. If we look at Pallinghurst, the co-investors, the likes of Christo Visa, the likes of APG, the likes of POSCO, and even Temasek, the Singaporean sovereign wealth fund, with all those astute investment houses, investment individuals, you're likely to see the management of the company being steered in a very good direction. Now, over time, if we look at the performance of the last 12 to 18 months, Pallinghurst has in fact been an outperformer in the resource sector itself. And with that, what's driven that is its strong balance sheet at a time when many of its peers don't have such a strong balance sheet. And importantly, they've continued to ramp up volumes. So you've indicated that, you know, it might not have performed as he would have liked it, but over this time, they've quietly continued to go about their business and ramp up volumes. And I think now, with all the platforms in which they operate, reaching profitability and also being cash flow generative, I think the tide is turning.
Fahad, do you think that they've got the right portfolio mix? We talk about, we compare companies like BHP Billiton and Vale and Anglo-American PLC, and we talk about, well, they've got too little of this and too much of that. What about Pallinghurst? Are they going to stay with their 4 pillars, do you think?
I think so, and I think it's all very well thought out of. If you look at, for example, Gemfields, exposure to late cycle commodities, which over the long term I think has significant value and unlock potential. If you look at what happened to De Beers and what they did to the market for diamonds, I think the best strategy here in Pallinghurst is to do the same in the markets for gemstones. So that's rubies, sapphires, even and emeralds.
Coloured gemstones. That's what it is, yeah. Because I mean, in the old days, of course, we would love white diamonds, but today everybody wants the coloured gemstones, and also the Fabergé brand. So it's luxury goods as well as industrial commodities. It's a lovely mix, actually. It's an intriguing mix.
Yes. But you know, within the group, so they've got the ability to go from mine to market with that retail exposure through Fabergé, and then also they've got, like I indicated earlier, those attributes of low cost, shallow resource basins and actually long life resource basins. I mean, Kagem, the emerald operation, is a typical example. It's been producing emeralds for a number of years, and it's got a life to still take it another 20, 30 years.
Where does this company go from? I mean, it's sort of a quiet little stock with a big name behind it, and you know, people like yourselves are highlighting the benefits of this company. But on the other hand, it's not on TV and radio every single day because it's a relatively small cap. Let's call it a medium cap. Has it got the potential to become a really big player in the resources sector?
I think the first example that Ismael spoke about, Naspers, and how at one our founders bought that stock when no one knew about it at R1.45. So I think if you look at this company now, I don't think a lot of investors, as you indicate, not a lot of people are talking about it. Not a lot of people are aware of what the earnings potential is. And Ismael can speak a bit more to the valuations, but we obviously believe that if you take a 5-year view, there's significant value unlock potential across the assets that they do have.
And let's go back to RCL Foods now, because this is a fascinating story. And we're talking about the expansion into Africa. A few companies have had their fingers burnt by going north of our borders. And I've noticed the numbers from Dangote Flour in the last 24 hours, not particularly good. Do you think RCL Foods is going to crack it where other people have failed?
I think it's a very low-risk strategy if you look at the strategy they're taking to go into Africa. Firstly, in South Africa, one of the key competitive advantages is the fact that they're one of the biggest suppliers to the fast food sector.
Yes.
So as the likes of KFC, McDonald's, now we've seen Burger King come into South Africa, Domino's, Pizza Hut, as these players expand, RCL benefits as a key supplier into those markets. Now when you're talking about Africa, the likes of ShopRite expanding into Africa, and that market, 1 billion people, and very underpenetrated fast food and a very underpenetrated retail market. So as their customers or relationships that they already have in place, as they expand into Africa, they would need a reputable supply chain partner like RCL to go in with them. And I think that really represents the opportunity. And the fact that you're going in with your customer, I think greatly reduces the risk. And obviously, we spoke about the asset management team. We spoke about a very strong majority shareholder. That does reduce your risk quite substantially, both from an execution and from an oversight perspective.
There's an Africa risk, though, isn't there? I mean, the Africa risk is the fact that the oil price and a resources-rich continent is suddenly faced with resources prices that are under huge pressure. I mean, there's been some stabilization in the last week or so, but is that a risk for a company like RCL in the short term? Long term, I love the story. Short term?
Look, I think there's always an Africa risk, but with risk, there's plenty of opportunity. Fahad has, he's gone through at length to indicate the opportunities that RCL have in front of them. But importantly, that's why we put such a premium on management. Without management, it can take any company to just rush off into Africa in a high-risk environment. But with the direction of management, with Remgrow, they've proven their success through a number of their investments, and that gives us comfort that the risk will be well managed, and they'll, like Fahad indicated, they'll go into these operations partnering with some of their clients and move in a more thought out way.
I like this because I have various shows on this on CNBC Africa, and I haven't heard these two companies for quite a while now. Are these big bets for you?
We are substantial shareholders in both these investments, but obviously we've got a very strong investment thesis. These companies, we believe, have the attributes in terms of market leadership, having the ability to convert that market leadership into profit leadership, robust cash flows, strong balance sheets, and a secular growth story. I mean, if you talk about RCL Foods, food security is a big story in South Africa, on the African continent. Similarly, if you look at the assets within the Pallinghurst table, I think there are secular growth stories there, which gives us a lot of conviction on both these stocks.
And finally, just the overall market, Ismael, if you would. The all-share was within a whisker this week of all-time record highs in rand terms anyway. Are you slightly nervous about what you see with the first 6 weeks of this year?
I think, we have seen a trend where prices have ramped up over a number of months. But with that comes we've seen increased volatility, especially over the last month.
Yeah.
And with that comes opportunities. And this is a time where investment houses like ourselves, with the work that we do in looking at the value and the opportunities and the attributes of these underlying companies, these underlying investments, this is where we feel there are opportunities. There are those stocks that haven't been identified yet, like a Pallinghurst, like an RCL, that as they continue going about their business slowly and positioning themselves for the long term, they'll start hitting the screens, they'll start popping up on people's radars. And we think that not only whether it might be share price performance, the earnings performance will drive that as volumes come through. If we talk about Pallinghurst, you've got weaker emerging market currencies, a lower oil price, and as that comes through, so you've got the lower cost of operations, you'll have volume ramp up, which will contribute to margin expansion together with lower input costs.
So there are uncovered gems on the JSE, despite the fact that everyone seems to know everything these days because of the media and the fact that everything is covered. It's a relatively small market. There are some companies that are undervalued and overlooked.
Definitely.
No doubt.
Okay, Fahad, thank you very much for your time. Ismael, the same. That's Fahad, Shaikh, and Ismael Ebrahim, who are from Oasis Asset Management.